Okay. Well, you guys are in luck today. This is something that I had put together a while ago. I was going to put it together as kind of like a course, but I figured the reality is it's going to do more agents more justice if I just record it now and throw it on YouTube for you guys. Um, this is called the Agent Accelerator. And so I really just want to share this with new agents mainly. If you're a seasoned agent, though, this might help unveil the cover that's been put on your damn eyes, by your previous uplines or IMOs or people who just might not be telling you the truth. So here, we're going to lay it all out. Look, I got mental alchemy training. We're just going to skip this. I talk about this a lot. I really just want to get into the meat and potatoes. So if that's fair to you, you guys go ahead, click the like button. Let me know if you guys find value in this. Let me know if you want me to elaborate and expand on other slides as well as we go through this. But we're gonna pass right through here, and I'm just really gonna get into the meat and the potatoes of the Agent Accelerator. And this is really just designed to help accelerate a new agent who wants to do telesales. I want to be real specific on that, okay? If you want to do telesales, you want to be successful, you don't know where to start, bingo, this is it right here. This is gonna be for you guys, okay? Let's move past. So I want to talk about business development and strategies, okay? Give me one sec here. Let me just fix my screen. So a lot of this is gonna be okay, you're in telesales and you want to learn about what kind of business strategies are there to help newer agents be successful very early on. This is the bird's eye view of everything that entails the Agent Accelerator. Now, I was even thinking about doing like a workshop type deal where I just maybe break this up into a couple of different videos. So I don't know exactly how I'm going to do it, but this is really a lot to go over. If you guys are obviously looking at my screen here, I talk about leads. I talk about actual like legitimate business structures that you guys could, do in your state, whether that's filing an LLC, different carriers and niches to jump into, like really structuring out your business. The importance of cash flow in this building. This is another one of those veils that these IMOs will pull over you and just say, hey man, you should do as earned. That's bullshit. You can't make money as earned doing telesales. I'm sorry. At any rate, let's hop into the first thing, guys. Leads. What about leads, right? What kind of leads should you be taking? The first thing that we're going to talk about is going to be the free leads. I want to explain to you guys what exactly a free lead is. More importantly, who should take free leads. Secondly, it's a little bit different. We're talking about lead types. Well, there's really only two different lead types: outbound, inbound. And I take that back. Maybe three. Maybe an internet lead, right? The thing is, an internet lead could be inbound or outbound. But at any rate, I really want to talk about this. Free leads. People shit on overrides all the time. I'm one of those people. Me. I don't think overrides are the best way to train a new agent. But that's simply because your upline is not only responsible for the success and holding the hand of you, a new agent, but they also are responsible for producing annual premium on their own pen. If you've been in sales, well, that's going to take a little bit of time out of your day, right? So to justify the time taken out of your day, you're contracted at a percentage lower than your upline because the upline's going to receive an override on the business that you write. Fair, whatever. It is what it is, right? The problem is when that upline just recruits and production goes down and down and down. Well, I mean, it really leaves the upline no chance but to pay more attention to the agents who are paying, right? Paying, like making the money. So that's not really the best way to do it. There's got to be another way. There has to be another way to where it's a more synergetic experience for the guy training, the guy who's new, right? It's got to be more synergetic. Well, LOA, it's what we call license only agent. It's where the upline or the agency bears the entire risk for a new agent to come into the life insurance industry and train on someone else's dime. Okay? When I first got into the industry, I had to save up tips from delivering pizza. I had another internet job where I was basically a fronter. I was basically, generating interest and transferring those clients to a live, I would live transfer them to a closer. And I had to save up money, not because any other reason than I had to learn on my own dime. I had to buy my leads and spend my own marketing money. And every time I heard a no, it was money out of my pocket, right? Every time I had to learn something or there was a barrier in the way of an application being submitted successfully, I had to pay for that learning experience out of my own pocket. Out of my own pocket, right? So yeah, there's a couple of things with LOA that you want to look out for that can make or break a good deal, okay, in the industry. You want to find out if it's captive. You want to find out what percentage you're going to get paid. You want to find out what the chargeback contingency is, okay? You want to find out how many leads you're going to be working, what kind of lead types, okay? So there are really good LOA models out there, really good agencies that offer LOA. And it's a really good experience for agents to kind of take the burden off of their back to spend marketing dollars when you just now are learning how to sell life insurance. So free leads are for people who have no sales experience, no or low cash flow, right? Maybe you are good at sales. Maybe you have a couple of dollars to spend, but you're just not responsible with your own time. I mean, what percentage of the agents out there right now who are independent agents who can't manage their own time? For whatever reason, they just can't do it. But they find themselves in a position where they're building another person's business because that person knows how to manage your time better than you can. Don't let that be you. If it is, again, take it for a learning experience, tighten up those bolts, and do it yourself, okay? Now, last thing we're talking about is outbound leads. This is a certain lead type. Certain agents should take this lead type. What do outbound leads offer? A low barrier to entry, meaning 9 times out of 10, you're going to pay less marketing dollars to acquire an outbound lead type, whether that's a pre-qualified callback, someone who fills out a form online, and you have to call them back, even appointments, even people who set appointments on a calendar and you have to reach out to them. It's just a lower barrier to entry. It's a lower cost per lead. People who are new to telesales can cut their teeth on these leads and learn without having to spend so much money. And yes, we do call them old-fashioned, and they're really great for training. Any outbound lead's going to be great for training because the KPIs are pretty consistent. Once you know what the hell your KPIs are in any business, I mean, it becomes predictable at that point. So you can set different goals other than, hey man, you just need to write $1,000 a week, right? Well, how do we get there? All right, outbound leads really do provide you a way to get there that's predictable. Inbound leads do the same. It's just a better return on your time. It's a higher barrier to entry. You're paying for a higher intent lead. And I like to say less effort, but in reality, it's really not. I mean, you still have to close. You still have to sell. It's consumer initiated, so any consumer initiated all the way to your phone ringing would be considered an inbound call. A lot of good examples of an inbound call would be if you get a live transfer from a fronter. Well, obviously your phone rings inbound. A TV call in, a web call in when someone sees an advertisement online, click here, call now. It's pretty self-explanatory, right? Now, inbound leads, there's going to be more stipulations on being able to receive an inbound lead because of the delivery requirements that most vendors and most agencies have to figure out, the obstacles of delivering those lead types to you. So just be prepared to spend a lot of money, not just on leads, but on state licenses. And in return, you will get that money back quicker, at a quicker rate, because you're speaking to a higher initiative client, right? So let's talk about some numbers on these lead types. And maybe I'll just, maybe I'll just make it this one video, and then we'll come back and we'll look at some of the other parts of the Agent Accelerator at another time. Lead cost is about $15. I've seen them all the way up to $25 per lead for an outbound. Just depending on what kind of lead it is, I guess, outbound. If they go through like a long format, SEO kind of lead. But at any rate, I mean, on average, I would say it should be about $15. Let's say you have an order of 75 of those leads per week. That should be an initial investment of $1,125. Now, the leads that I'm familiar with, from web leads to pre-qualified callbacks to even Facebook leads, closing percentages are about the same, anywhere from 8 to 12%. So let's just call it on the low end of 8%. You have 75 leads and you close 8% of those leads. So that's about 6 sales. And I even threw in there 5 after accounting for maybe a GI policy or one that doesn't fall through. The average premium on these leads was $900 at the time I made this slide. It's probably around $840. So on 110% contracts, you're looking at $1,100 in annual premium on average, right? You get 75% of that $1,100 advanced to your bank account. That's $825 net per sale. 20% basically GI, and it's as earned. One thing I didn't account for in this slide is graded. Okay, most graded, it's going to be a little bit more than 20%. Just depends on the carrier. You have to ask your upline what your contract levels are for each individual carrier. Okay. So if you're taking 75 leads per week, okay, and we're looking at about $3,000 per week, $12,000 per month after expenses for marketing. This is just what you can expect off of 75 leads per week. If you follow the right systems, if you guys have a system in place that you can plug into and hit the KPIs that have been proven year after year, day after day, month after month, call after call, conversation after conversation, and it's always been the same, then you can predict your income. And these are the numbers that fall true in our company, okay? You're looking at about $12,000 per month net after expenses, and I'll say full time. Guys, I'll be honest, most agents aren't working 35 hours a week, okay? Most agents are working about 20, maybe 25 hours a week. Just being honest, like of actual dial time and talk time. Inbound, a little bit different. Let's just say the average cost of an inbound lead is about $80. You order 30 of those guys a week, that's $2,400 in marketing expenses per week. Now, a lot of agents don't have that up front, okay? But you want to at least have 30 leads your first week to start. Now, again, you have a higher intent lead who is engaging on an inbound basis, right? They're engaging in commercials they're seeing on TV. They're watching YouTube videos and they're clicking on call now buttons, right? They're on websites searching in Google and searching information, and they're looking at, well, who can get me the best rate, right? And then they think they found somebody and they click a button to call, and it's you. You answer the phone. So you're going to close about 20%. It's a lot more than 8%, right? So you're going to close quicker and higher intent leads on this lead type. So let's say you close 20% on 30 leads per week. It's about 6 sales, 5 after accounting for GI. The average AP on these lead types is about $1,100 on 110% contracts, about $1,210 per sale. 75% of that gets advanced to your bank account, $907 net per sale. Pause the video, write it down, do some other numbers, right? Just imagine maybe your annual premium that you wrote is, maybe it's $1,500, maybe it's $2,000. Hell, I wrote one last week for $3,600. Do the math, right? 75% is advanced on level business, $907 net per sale. On average, 20% is GI or as earned. Nothing changes there. It's just different carrier or whatever, or different lead type, doesn't matter. It's the carrier that pays you, not the lead type, right? So total earned net commission, $4,535. After marketing expenses, we're taking, right? So the $4,535 minus the $2,400 in marketing expense, you're left with $2,135 per week. That's about $8,540 per month net after expenses. The beautiful thing is you could take 8 leads easily a day, right? So 8, times 4, 24. So that's roughly 20 hours, 25 hours a week again, right? And you're at $8,000 per month net. Okay. Easier sales. You don't have to make dials. None of that as well. Which brings me to the next part of our slide here. Knowing your numbers, setting SMART goals and all that. And it looks like we're in business structure. So that's gonna do it for today. I think I'm done with this one. We'll just drop this video on YouTube. We'll call it lead types. All right. Let me know if you guys want to see any more of the Agent Accelerator. You guys saw the bird's eye view. Maybe you said, "Dang, dude, I want to see about LLCs." Let me know. Let me know in the comment section. And until then, thanks for checking it out, guys. See ya.